Raleigh Regional Office for Risk Management Agency. Let me offer my sincere apologies for not being there in person this morning. Up until Thursday of last week, I had every intention of being there, and Thursday morning, our USDA was notified that all of our travel funds and funding was on halt for the next 30 days. So I appreciate Nate, y'all being willing to be flexible and allow me to join you guys virtually. So a little bit about myself. I'm a native of North Carolina, born and raised on Fluker Tobacco, the row crop operation. So no stranger to agriculture. I've been with USDA 22 years, and up until December of this past year, I had spent all of those with Farm Service Agency as the county director and district director. So I'm excited to move into this role and dive into crop insurance and get an opportunity to meet folks up and down the eastern seaboard from North Carolina to Maine. So appreciate your time this morning. So Nate, did that advance okay?
Yes. You're good. Yeah, you're good.
Okay. So a few of the things I wanted to just briefly cover this morning are here on the screen in the time that we've got. And I hope, if we've got a few minutes at the end for a few questions, I'll do my best to either answer those or be glad to bring them back to the rest of my staff here in the Raleigh office, and Nate will filter answers, I guess, back through you would probably be easiest. So briefly, just a little bit of insurance overview by the numbers. I think it's always good to take a look back and see what has happened over the past, in this case, 5 years. The number that really sticks out to me in 24 is obviously the indemnity amount. You can see everything else has been pretty consistent, but a jump in indemnity in 2024, and then I'll switch over to Maryland briefly and take a look at those numbers. And obviously that same indemnity number for 24 sticks out to me. And obviously if you guys had any kind of year, particularly in corn, that we did in the southern end of the region, particularly in North Carolina, it's understandable why we see that indemnity number significantly higher than in previous years. So again, always good to take a look at what crop insurance is, how it's performed up there in the Delmarva area. Just briefly, as a reminder, show you guys available programs, and they're pretty much similar for Delaware, and then again in Maryland, from a standpoint of what's available for purchase with regard to federal crop. One of the things, and the main thing I would share with you guys is that just because it's not on this list doesn't mean it's not insurable. While these lists are expensive, they're not all inclusive. If something has come up that you're growing and selling, marketing, that you don't see on the list, I encourage all of you to reach out to your crop insurance agent or find an agent if you aren't currently purchasing crop insurance to ask about being able to insure a crop. It's potentially available to be able to insure through a written agreement if it doesn't already have coverage from the standpoint of a regular multi-peril policy. So again, in general, these are what are available in that area. Just a reminder, sales closing dates coming up. Obviously got one here in a couple of weeks, March the 15th, for most of our spring stuff and our whole farm revenue product. If any of you have purchased that or looking at purchasing that. And then micro farm next month, the middle of April. The whole farm policy and the micro farm policy are similar in nature and how they're designed. The income limit on the whole farm is obviously significantly higher than it is on the micro farm, but in general they operate their revenue products and they operate in a similar manner. So, depending on the size of your operation, I, encourage you to take a look at those. And really just depending upon the diversity of your operation, would encourage you to take a look at those as well. Just a quick update, obviously for corn and soybeans wheat, no real changes with regard to policy moving into this current crop year. The one real change that it would affect producers in their area, for anybody that's fueling processing beans, has to do with the end of insurance period. I think we at the request of the industry, we extended it by about 15 days. It had been, the end of insurance had been October the 15th and got moved to the 31st of October. And that was basically because, as we talked with the industry, or our office talked with the industry before I came on board, weather conditions in the spring of the year for planting, may have delayed planting, which delayed harvest. And so moving this end of insurance period, even roughly 2 weeks, allows for a little bit of extension of coverage in the event the crop goes in late and therefore comes off late. So I was really, as I came in, was really pleased to see that we were able to make this change for the guys that have processing beans up there in the area. Let me talk briefly about double crop soybeans. If you hear your agents talk about following another crop or not following another crop, we're essentially talking about double crop soybeans behind wheat. I know this topic has come up previous to me coming on board as director, and this particular topic has come up several times to me since coming on in early December. And so, the short answer is, if Delaware, if Maryland, if the Mid-Atlantic up there wants to take a look at trying to insure double crop soybeans separately than full season soybeans, then we're certainly willing to take a look at it. Some things to consider that y'all see bulleted here. In doing that and separating it out, setting up different final planting dates, and it's different premium rates, different different yields. It changes your unit structure and an opportunity to have different unit structures. And then, there's a record keeping portion of that, particularly with being able or having to keep your double crop acres yields separate from your full season yields. And so I think where we are as a regional office with RMA is we want to continue to have these conversations with producers through their producer organizations, be it a soybean association, extension service, state farm bureaus, your departments of ags there, and just make sure that we flesh out everything that would be involved with making this possible and producers being able to insure your soybeans separately. We want everybody to be clear what it would mean from you guys, particularly from a reporting standpoint and a different premium standpoint, but also what the opportunities are for unit structure. And if we get through with that conversation and you guys as producers and as a state, as a region, want to move forward with trying to do this, then that last bullet, local and state level support, we would just need something in writing from a state soybean association or your Department of Ag, your farm bureaus, maybe even cooperative extension, to say, yes, we understand everything that's involved, and we'd like for RMA to move forward with looking looking at trying to do this. Hopefully, this 30-day travel freeze will be lifted, and then, I want to be able to continue this conversation, really in person. I've been up in the area once. I'm looking forward to getting back up there again and spending some time with agents and producers and association representatives to be able to have a lot of conversation, but in particular, a conversation on this specific issue so that we've got direction on how we need to move forward if this is something the area is interested in. Let me talk briefly about hurricane protection. I've had some conversation already up there about the hurricane index protection policy that we came out with in 2020. The one thing I would point out on the slide is obviously 2020 was when the new product came out, but the real plus that I feel like came out was when we did the expansion in 2023. The expansion did two things. Number one, you can see where the difference in the color on the map, and I know it's probably small for you guys to see, but everything that's in the teal or the blue-green color was the original coverage area for hip weed, as we call it, and everything in brown was part of the expansion of the availability for this index product. The other thing we did, and I'll switch my screen here and switch it back, is in 2023 is when we started the tropical storm option, which has been a tremendous benefit, particularly along the eastern seaboard. The further you move into North Carolina and further south. So I'll back up. So hip weed was basically the hurricane policy. I've got a timeline that kind of will better explain what we meant by a simple program and rapid payment. But the hip weed policy without tropical storm is strictly wind, and if you'll notice, it's got to be a named storm with sustained winds of at least 74 miles an hour. Wind only. So if a county hit that, it paid. We are also using, you see county or adjacent county, similar to how we do disaster designations with primary and contiguous disaster counties. That's kind of how this program and this product is set up, where we're doing direct counties, and then we're also including adjacent counties when we're looking at counties that trigger for payment purposes. I separate these slides. I've had the question recently, can I have the tropical storm option but not have the hip weed? And the answer is no. You have to have the hip weed, and then the tropical storm option is on top of that hip weed. You can buy only the hurricane and not have the tropical storm option if you choose, but you've got to have that underlying hip weed product before you can have the tropical storm option. And like a lot of things that have happened over the years with changes in federal crop policy and products, we got feedback in those 2 or 3 years after the initial 2020 release from growers about what changes may be needed. The one thing that's different, if you weren't already aware about tropical storm option, is not only is there a wind function to it or a wind requirement, but there's also a rainfall requirement. You gotta have both. So you gotta have at least 39 miles an hour wind for a minimum of 2 minutes, and a final rainfall amount of at least 6 inches. And I've got a slide or two that'll hopefully try to explain how that 6 inches is determined and how we derive that. the rainfall and how it's determined is probably the one issue that we've had the most questions about as we move through with this program. So let me talk about data sources for the program in case you were not aware. We are using NOAA data for this program. Our wind speed data is coming out of the International Best Tracks archive, and then we're using the Climate Prediction Center to give us our rainfall data in order to determine what counties trigger and when they trigger. You know, it was important when we were developing the product, or RMA developed the product, that we were getting a source that was a consistent source that, and probably more importantly, was a reliable source and recognized as a source of data to use to make these calculations. So if anybody is asked or curious looking into these products and where the numbers come from, this is it. We're getting the data from NOAA on both accounts. So the wind is pretty straightforward. We got to have either 74 or 39 mile an hour sustained winds for 2 minutes to meet the wind part of it. Under the tropical storm option, this is where the question is: how do we come up with the rainfall amounts? And so we're using RMA grids that we use for various other index type programs, mainly the pasture rangeland and forestry program. We're using that grid system for this program as well. And I would just tell you that these grids, and you got a sample of what they look like on the screen there. These grids are roughly 17 mile by 17 mile square grids that is laid across the entire country. And so, depending upon the size of your county, and you know the total land mass of your county, or the square miles that your county covers, you know, you could have anywhere from 2 or 3 grids to as many as 6 or 8 grids that cover your particular county. My particular county in North Carolina, my home county of Pender County, top 5 county in the state as far as size, and there's 9 different grids that lay across my home county, and so they're gathering rainfall out of all of those grids to determine whether or not we're going to meet that 6-inch requirement or not. And I've got a slide in just a second. I hope to make that'll hopefully will make better clarity of what I've just described. We're looking at rainfall over a 4-day period, and essentially we're looking at 1 day before and 3 days after when they're gathering data. I know there's been some talk about making a change to that to maybe 2 days before and 2 days after. You know, we all recognize that not every storm comes in the same, and it doesn't rain the same way. You know, sometimes storms have all the rain in front of it, and sometimes storms have all the rain behind it. So, you know, looking at a change like that may be advantageous. The other thing that has already been done is instead of if a county triggers 5.9 or more inches of rain, we're going to round that to 6 inches and to meet the rainfall requirement under the tropical storm option. You say, well, a 1/10 of an inch doesn't seem like a whole lot. When we're carrying it out to 2 decimal places, you know, that can make a difference. You know, if it was previously before we allowed the round, 5.92 inches didn't hit the 6-inch mark, and so that rounding hopefully will be to a county's advantage and producers in that county's advantage whenever we have a named tropical storm come through the area. So, just a quick example that I hope kind of illustrates what I've described. This particular county we're looking at here, the way the grid laid, actually there's 5 grids in this county. If you look all the way down in the very bottom right, there's a line there, and it basically says 0%, so it didn't show up in the graph. And so essentially what we're saying is that you see the different percentages, and we'll start with the largest one, the bottom right. 38% of that county laid in that bottom right grid, and then the bottom left, 29% of that county was in that 17 by 17 square mile grid. And so we essentially had four grids covering this particular county that we're looking at. And the Climate Prediction Center used their gauges that are in these grids. They use satellite imagery, they use some radar imagery, and these were the rainfall totals that were seen or observed out of each of these four quadrants. And so we're just doing the math here. So roughly 20% of 5 inches, we're going to attribute a little over an inch, and about the same for 14%, and how we move to the 29 and the 38% in the grids to the southern side. And so we're just going to add all that up. So in this case, we met that threshold. We met that 6-inch threshold, and as long as we meet the sustained wind threshold, this particular county would have covered or would have triggered under the tropical storm option. I've had a lot of questions about what happens if it rains a whole lot in the 14% quadrant and it doesn't rain hardly at all in the 29% quadrant. Again, we're gonna do the math. We're gonna do the math to see, did it rain enough in that smaller quadrant to offset enough out of the larger quadrants to still get to 6 inches, or 5.9 that'll round to 6. So it's a good product. It's worked well when it's been needed. As with anything else, if there are suggestions, questions, comments, concerns, I would like to hear them, send them to us, because as insurance products go, this is fairly new, and so we're open to any conversation about the product. Wanted to throw this slide in here just because we've had a lot of questions and a lot of misunderstanding about different things. We talked pretty much about all of these misconceptions, except for that second one there. I had damages on my farm, specific crop damage, and I should receive a payment. If you'll notice, another thing that we have talked about so far this morning with regard to this hurricane product, we talked about having to have crop damage, right? We're strictly using wind data, and we're strictly using rainfall data in the context of the tropical storm option. It's not anything to do with your crop damage. If you meet wind, or you meet wind and rain for the tropical storm option, your county will trigger a payment under HIP wheel or the tropical storm option. So this kind of talks about a general timeline that goes back to kind of the intent of the program. We did intend for it to be very responsive. So immediately after an event happens, we're getting data from NOAA. We're getting the wind data, we're getting the rain data, and within 30 days or less, we're going to publish what counties triggered for either a hurricane payment or triggered for a tropical storm payment. That publication goes out through a manager's bulletin that our large approved insurance providers or AIPs receive. Your agents will get a copy of that, and you'll be notified, and payment goes out very fairly rapidly. The other thing that we do just to make sure that we've done things correctly, and the folks that are truly triggered are triggered, is there is a reconciliation or a second a second look at things. And so you can see within 60 to 90 days, the Climate Prediction Center, they go back and take a look at precipitation data to see, did we get it? Did we get it right? More data has come in, and I know from personal experience, particularly in North Carolina, this second opportunity, or this second look at precipitation data has actually brought counties in that didn't make it the first time. And so when that happens, those counties receive either a hurricane and or tropical storm payment as well. We do take a look at the wind data one more time the following year. Normally that won't bring anybody else in from a trigger standpoint, just because the wind field for hurricane winds, and then obviously for tropical storm winds, extends so far that the wind trigger, particularly with the tropical storm option, is almost never an issue. The rainfall, the 6-inch criteria is normally the limiting factor. So through the rainfall reconciliation, that 60 or 90 days after is normally where we bring in pretty much all the counties. If by chance through the reconciliation process it is determined, hey, we paid a county and we paid producers in a county that had these options that didn't really trigger, we're not gonna come back and ask for a refund. We made a payment, and that'll be what it'll be. But we do look forward to being able to make sure we get it right, and adding any counties that we should have added the first time around. So the last thing I'm going to talk about is the Delaware subsidy. Secretary Clifton mentioned it earlier this morning, and he did a great job of giving you what has gone on. And obviously coming in December, I'm on the tail end of this, and certainly pleased to be a part of this additional assistance to producers in Delaware. The one thing that I will mention is that third bullet. All RMA plans that are viable plans, not catastrophic plans, are eligible for this additional subsidy. Any endorsements that sit on top of your multi-peril policies are included in that, and then our whole farm revenue product, as well as anything for livestock insurance. They're all eligible to participate in this additional subsidy. Just a few other things I'll briefly share. Secretary Clifton mentioned how RMA had used to determine the 2024 data to determine how subsidies were going to look going forward into 2025. When RMA did the math, and having the $2 million allocation and looking at everything that producers had done in 2024, it's an average of about 16% subsidy is what it is going into 2025. And so, that may vary depending upon an individual producer's choices for 2025. But on average, that was how it worked out. And I think the other thing that is great about this program moving forward is that unused funds from one year roll into the next. And so, we're going to start out at the $2 million, and if we don't quite use it all, and that's yet to be determined, whatever is remaining will roll over into 2026, and so it'll be 2 million plus whatever was left unused from the 25 years. So, I think that's an opportunity to continue to improve assistance for eligible producers in Delaware moving forward. Secretary Clinton did mention we absolutely are in the process of implementing the program. My contact with RMA, who has worked very closely with Secretary Clinton and the rest of the department staff, they're well on the way to this implementation. 60 to 90 days is the target to be fully implemented. Hopefully it will be more toward the 60 instead of the 90-day to get fully implemented. We fully anticipate everything to be complete and ready to go by the time we get to the August 15th premium billings. And then the other thing is, as I've learned about this product and this program coming into my role, the additional subsidies will be handled, or applying the state subsidy in addition to the federal subsidy will be handled through the AIPs that your policy is written through. It's my understanding that when you receive the bill, the additional state subsidy will be shown on that bill as well. So, I'm just excited that this additional opportunity for assistance is there. I did not realize until last week that Delaware had a similar program or product previously. So I'm absolutely glad that this is back, obviously different, and I'm certain that there will be questions as we go through this first year, and we'll all kind of learn together from the first year and have a better handle on exactly what it means to producers as far as additional assistance on your policy. I will tell you, I sat in with the Secretary and Department of Ag folks last week on a meeting with agents to be able to have some better conversation with you guys as producers about officially rolling this out. Agents had a lot of great questions that we gathered, and later this afternoon we're actually going to have another call to get those questions answers and get some clarifications so that you guys as agents that may be in the room can have good conversation with your customers about what it means to them. Even at a dollar per acre, what does additional assistance mean to you guys at that level? So excited about this product and being a part of this moving forward. Nate, that's the end of my formal comments. I hope everybody can see that's my contact information, direct email. The second email, the RSO NC at USDA.gov, is our main mailbox for the Raleigh Regional Office. Feel free to reach out in either manner that you would like. You've got any questions or things come up. And then that telephone number, that is my direct line. If anybody's got any questions or needs anything of us in the regional office, I certainly encourage you guys to reach out in any of these manners. When things come up that we need to know about, got questions about, our door is open to hear from any of you. We want to be of service to our AIPs, we want to be of service to our agents, and we also want to be, most importantly, of service to you guys as producers in the region. So, Nate, with that, I'm finished. If anybody's got any questions, I'll try to field those, or again, take them back to the staff and get answers.
Hey, Kevin, can you hear me on there?
Yes, I can.
I'm going to take the mic around the room. We do have one question for sure, and then if somebody has a question, I'll just bring the mic to you. That's it. And hopefully Kevin can hear you. If not, I'll repeat the question.
Okay, perfect.
Is a northeaster considered a tropical storm?
Did you hear it, Kevin?
Did he ask, can a nor'easter be considered a tropical storm?
Yes. Yep.
So as long as it's a named storm, is my understanding. As long as it's a named storm, I quit sharing my screen, but I think I can go back and share it again. Hold on. Bear with me 1 second, guys. Nate, can y'all see that slide?
Yes. Yep.
Okay. As long as it's a named storm, the question I will go back to is and I will clarify, is tropical. That's the part I'm not sure about, but I will ask. Like a nor'easter in the wintertime, is that the reason for the ask? That would meet both the criteria.
In the summer?
Yeah, like in the springtime, sometimes we get that here.
Spring storms, okay. I will ask,
And the fall as well.
in the fall. I mean, when we get into hurricane season, obviously it runs well into the fall of the year. I think like November. I think it's when it ends. Fall storms, as long as it's named and it meets the wind criteria and it meets the rainfall criteria, yes, it would trigger. Your county would trigger. Spring storms outside of hurricane season, I'm not sure of the answer on that. Nate, I will find out, and can I filter that back through you?
Yeah, absolutely.
Okay.
Also, Nate, I'm also a weather watcher for the Delmarva Farmer. And there's many times we have gotten 6 inches of rain or more for the whole week. So would that cover that too?
So so the question was, so there are times when we get 6 inches of rain in 1 week. Would that also qualify as well? I think Kevin is saying it has to be the storm has to have a name. So
We get a lot of rain, but it doesn't have a name.
If I can answer that. I mean, unfortunately, no, it will not trigger. And I mean, we had that situation in North Carolina just this past year in 24, where the sustained wind was like 36 miles an hour, and we had more than enough rain for a number of counties in North Carolina to trigger, but it never did because it didn't hit that threshold to be named.
I got another question for you, Kevin.
Kevin, if you have 1,000 acres of soybeans and 500 of those are planted double crop, your yield is 100 bushel to acre on the full season and 50 bushel to acre on the double crop, you basically have purchased crop insurance with no opportunity for any kind of indemnity ever being paid. Can that be remedied in the short term? Because that's an established practice already here. And so therefore, crop insurance in that particular situation forces you to make a decision for your cropping year. It's not based on the market situation, but rather on the insurance situation.
I missed the last part of that, Nate, I'm sorry.
If you have 1,000 acres of soybeans, 500 acres are double crop, 500 acres are full season. Under the current situation, as I understand it, unless something's changed, when you insure that crop, you're insuring both the irrigated and the non-irrigated. Excuse me, the irrigated full season and the irrigated double crop in our situation. Therefore, if you were to have a loss, it's both impossible to have a loss under that scenario, given our yields. So we're basically kicked out of having crop insurance for soybeans because of our cropping decision. Can that be remedied in the short term?
I'm not certain that it can be, you mean from a standpoint of being able to insure them separately, as I
Yes.
talked about earlier?
Yes. Because you can't insure just one, you just can't insure just the double crop and not insure the full season. There's no way to do that, is my understanding.
Correct. So, in the short term, meaning, for this crop year,
Yes.
Yeah,
for this crop.
that's
For
correct.
this crop year,
Yeah, that's correct.
for this crop year, no, unfortunately not. That I'm aware of, and I'll qualify with that, and I'll go back and ask, but I know of nothing that we're gonna be able to do to eliminate or alleviate that scenario and be able to do it separately, for the 25 crop year.
Any other questions for Kevin? I think that's it, Kevin.
All right, again, Nate, I will run, actually these two back through you, and if I can get answers before you all finish today, I'll provide them back to you, Nate, to be able to share with the group. Folks, I appreciate the time this morning. Again, I sincerely apologize that I'm not there in person. Hopefully, they will allow us to travel here sooner rather than later, and I can get up there and get an opportunity to spend some time with all of you and have more conversation about this double crop topic or anything else that you got on your mind to discuss. So hope the meeting, the rest of the day goes well. Nate, again, I thank you for being flexible, given the situation at the last minute.
Yeah, thank you, Kevin.